Hello and welcome to another accounting tutorial where today I'll be taking you through the trial balance. Firstly though, what is the trial balance? Well, before I answer that, it's important to understand what the general ledger, also sometimes referred to as the nominal ledger, of a business is. So I'm sure you can understand that as part of a business's responsibilities, they are required to record all of their business transactions. Now, to keep transactions separate and therefore clear, a business would split its transactions into different categories because no one wants to be mixing sales in with their purchases or expenses. In order to do that, a business would therefore create a number of different accounts to enter these varying transactions into. Enter the general ledger. See, the general ledger is what houses all of these different accounts. But what used to be an extremely large book where all transactions were handwritten, for the vast majority of businesses, they're now electronic. So now we simply load up our accounting software, click into our general ledger, and there you are, all the different accounts we've created. Now, a trial balance is a list of all the business's general ledger account balances laid out in one report. Each account balance will either be a debit or credit, and at the bottom we total all the debit balances and all the credit balances, and the two figures should be the same. This ties in with the rules of double entry, where we know every debit entry must have an equaling credit entry. So from the most simplistic perspective, the trial balance shows a list of our account balances all in one place. So now we know what it is. What is it actually used for? Well, the trial balance has multiple uses. Firstly, if we just want an easy snapshot of an account balance, this would be the best report to run. Another use for the trial balance is for error checking. So I mentioned earlier that both debit and credit columns should equal the same value. And if they don't, you've got an error within the system, and that will need to be investigated. Another key use for the trial balance is its use in the production of the financial statements. It can easily be used as your starting point to generate your statement of profit or loss and statement of financial position. Now that we understand what the trial balance is and how it can be used, let's have a look at how it can be prepared. This is where your understanding of double entry bookkeeping really comes into play. It's important to note at this point that the vast majority of accounting systems will produce this for you. However, it's key to be able to recognize which accounts would usually have a debit balance and those which would usually have a credit balance in order to spot anything unusual when reviewing a system-generated trial balance. Let's take a look at an example. Munda Difflin are working on their month-end accounts and you have been asked to assist with the production of the trial balance. You have been given the following account balances and asked to prepare the trial balance, showing whether each account would typically have a debit or credit balance. So just a quick reminder that any account that falls into the following categories, so purchases, expenses or assets, would typically have a debit balance as these accounts increase in value with a debit entry. On the other hand, any accounts which fall into the following categories, so income, liabilities, shares or capital, i.e. your equity, would typically have a credit balance as these accounts increase in value with a credit. Let's now work down this list of accounts and decide whether they'd have a debit or credit balance. So we start off with the inventory, which is an asset, therefore a debit. A loan is a liability and therefore a credit. Vehicle expenses, well, it's in the name, this would be an expense and therefore a debit. Drawings are when owners take money out of the business for personal use. It is classed as a reduction to capital, and remember earlier we said that capital would have a credit balance and therefore a reduction to this would be a debit. Admin expenses are an expense, so a debit. Bank interest is classified as an expense to the business, often associated with the cost of borrowing money. As it's an expense, it would have a debit balance. Worth noting that if this was bank interest received though, it would be classified as income and therefore a credit, but as it doesn't say received, we can safely assume that this is bank interest paid. Purchases are a cost to the business and therefore a debit. Sales are income and therefore a credit. The payables ledger control shows the total amount the business owes to its credit suppliers, and therefore will be classified as a liability and a credit. The receivables ledger control shows the total amount the business is owed from its credit customers. As it's money owed to the business, it will therefore be an asset and a debit. Discounts received are classified as income. This is the amount of discount a business has received on its credit purchases for paying within a given time period. The amounts recorded within this account are often referred to as prompt payment discount or early settlement discount. With it being classified as income, it would be a credit. Discounts allowed are the flip side of discounts received. It's discounts we've allowed our credit customers to have for paying the business within a certain time period. It would therefore be classified as an expense to the business and have an expected debit balance. Sales returns are a reduction in sales. They record when customers have returned goods to the business. As it's a reduction to our sales, which is a credit, this account balance would therefore need to be a debit. Opposite to that, we have purchase returns, where we've returned goods that we've purchased from suppliers. As it's a reduction to the business's purchases, it would therefore need to have a credit balance. Our next two, we have heat and light and travel expenses, both of which are expenses and therefore debits. Capital, as we mentioned earlier, is the amount invested into by the business by its owners. It's not a liability, but it is owed from the business back to those owners, and therefore, although it isn't classed as a liability, does work in the same way and therefore a credit. A bank overdraft is the amount overdrawn from the business current account. It's an amount owed back to the bank and therefore a liability and a credit. Vehicles are an asset. It's a physical asset that the business owns and will therefore have a debit balance. VAT owing to HMRC shows the business's VAT liability that it owes to HMRC and therefore a credit. Rent and rates are classified as an expense and as a result a debit. And then petty cash records small value transactions that wouldn't go through the business bank account. It would usually have a small balance, but as it's money the business owns, that would be an asset and therefore a debit. Now the last step to completing the trial balance is to add up the debit balances, add up your credit balances, and the two figures should be the same. So if we go back to our example and add them both up, we can see that both the debit and credit column equal £262,180. Now if they aren't the same, then there's an error within the system and that would need to be investigated. And that wraps up this video on the trial balance. Hopefully you found this video useful, and remember, if you have, hit that like button and subscribe to the channel for more accounting videos. Thanks again for watching. I'll catch you in the next one.